I'm going to walk you through this first chapter, explain a little bit about accounting, and teach you how to use these notes that I'll have available for each chapter. These notes are aligned with your book in order. So it would be very beneficial for you to fill in these notes as you're reading the chapter. It's going to be beneficial to you to fill in these notes no matter what, because these notes will help you get your homework done quicker, and they're going to help you on the exam. So when you open your book, you'll see Objective 1, and you can go through and just define in your own words these terms that I've listed here. For example, when you see give examples of uses in accounting, in your book you'll see big bold letters that say internal. Then you can, in your own words, define what that means to you and give some examples of that. For example, when you see investors or external, you see the word investors. You see the word creditors. When we're talking about financial accounting, we're concerned with those external users. A lot of accounting is going to be learning these terms because what we're trying to teach you is the language of business. Accounting isn't math. It's not that hard. If you can add and subtract with a calculator, you can do 90% of your accounting homework. What you really need to understand are these terms, which is why it's so important for you to go through and fill out all of these notes. When you get down to the Objective 2, there's going to be a lot of terms here that you need to go back. Some of these might be a little harder to find, but they all go in order. For example, you'll see GAAP, GAAP, the Generally Accepted Accounting Principles. That one you'll find easily, but then you'll have to go back and look for ethics or the Sarbanes-Oxley Act and understand what those mean as well. And make sure you get all these terms filled in, as well as understand some of the principles that go along with accounting, like the historical cost principle and the types of businesses. That's all going to give you a good foundation to build on. The first real accounting thing you're going to learn is the accounting equation. The accounting equation is assets equals liabilities plus equity. Now again, you'll have to know what these terms mean, but in accounting, this accounting equation will stay true always, and we're going to use it from now until the end of this chapter and the end of this book. So make sure you get this equation down. Again, in your own terms, you're going to have to go through and define the word asset. An asset is something we own or control. So think about your own assets. Do you have cash? That's something you own. Maybe you own a car or some kind of equipment. These are normal assets, something that you own or control. A liability, on the other hand, is something we owe. So you owe somebody some money. 99% of the time, you're going to see the word payable when it comes to liabilities, because you need to pay somebody money. Our next thing is stockholders' equity. Stockholders' equity is really what's left in your company. So again, coming back to the accounting equation, we have assets and liabilities. Then we have the equity piece. It's whatever's left over. It's what we're going to keep in our business to help it grow, kind of like a savings account. Your stockholders' equity is made up of 4 pieces: common stock, revenue, expenses, and dividends. Again, make sure you go through, you define all of these and understand what they are. And then you're going to go through it and indicate if it increases or decreases stockholders' equity. Common stock would increase stockholders' equity. Common stock is the stock that somebody purchases to buy into the company. Revenue is going to also increase stockholders' equity. Expenses will decrease. And I think we all have a clear understanding of what revenue and expenses are in our own lives, but make sure you read through that book and define what they are in accounting. Dividends, these will decrease stockholders' equity. A dividend is something that if you own common stock, you know what it is. It's money that a company will pay out to its stockholders as kind of, if their company's doing good, they want to reward the stockholders as well. Now we're going to come back to that accounting equation. So let me write it here again. Assets equals liability plus equity. And what we're going to do first in accounting is analyze everything that happens. And then we're going to pull out what accounts are affected and how it's going to impact this accounting equation. It's important to note that the assets always have to equal liabilities plus our stockholders' equity. Don't want to put an equal sign. So keep that in mind. So that happens not only on a transaction basis, but in total, and we'll show you what that looks like. So what we're going to do is look at all of these transactions, plug them into our accounting equation, make sure it stays equal, and then we can move on from there. Let me go ahead, make this a little bit smaller. Bring it down here so that we can see it as we move down. Alright, so for our first transaction, we invest $10,000 in exchange for stock. So the company will get $10,000 and it will record the stock. If we notice, we're going to keep making sure that our assets equal liability plus stockholders' equity. And that's going to be in every equation. So we're going to put this equal sign right here, all the way down. So we want to make sure that stays true. So that second transaction, if we purchased equipment for $700, that's going to decrease our cash, so we'll put a negative sign there, but we get equipment. And this is okay as long as the accounting equation stays true. Those $700 cancel each other out, so it's 0 equals 0, and that's okay. We purchase supplies on account. On account means that we owe somebody money. We owe somebody money, that's an account called an account payable. And we got supplies for that. Our accounting equation stays true. We perform services and receive $3,000. That's going to increase our cash. And if we perform services, that's revenue to us. Now let's look at number 5. We paid our workers. We're going to decrease our cash for them. And then remember that stockholders' equity expenses decrease, so we're going to put a negative sign there. And I know that's true because my accounting equation stayed true. It's still 0 equals, or negative 1,500 equals negative 1,500. Number 6 is we paid $200 of the amount that we owed from transaction 3. So I'm going to subtract that $200 from there. I'm going to decrease the amount of accounts payable that I owe. In number 7, we performed services. They couldn't pay us everything at once, so they paid us $500. And then the other part they're going to pay us later. If a customer is going to pay us later for something, that's called an account receivable. And that's going to go in our assets. And the offset to this would be in our revenue account. Number 8 says we paid some rent expense. That will decrease our cash, and we're going to decrease our stockholders' equity, showing that in expenses. Number 9 says we received $600 from transaction 7. 7 was the accounts receivable, so they're paying off a little bit as we go, and it was $600. And then finally, that last one, we paid dividends of $300. That's going to decrease our cash and decrease our stockholders' equity. Then we want to go ahead and sum everything up here. This is going to be, do the easy ones first. 10,000. This is 5,500. And -300. Now let me go ahead and add up some of the other ones that are a little bit more numbers. So this is going to be 10,400 and 1,400. If I did my math right. Hopefully I did. So now we have all that. What we're going to make sure is that our accounting equations stay true. If I add all of these numbers up, all of my assets, it's going to come to 12,900. If I add up all that stockholders' equity and liabilities, that also comes to 12,900. So I know my accounting equation stays true. That's kind of the point of all this, to see where it all sits, because I can build all of my financial statements off of the accounting equation. We're going to talk about our financial statements for a little bit. So our financial statements for our income statement is going to be our revenue and our expenses. We're going to combine all of this together, show it in one statement to equal our net income. Our statement of retained earnings is then just built off of our net income and looking at our stockholders' equity and kind of like what's left in that company from last year and adding or subtracting our net income or net loss. And then we're going to look at our balance sheet. Our balance sheet is going to be all of our assets. We're going to include our liabilities and whatever is left of our stockholders' equity, which is going to be your common stock and your retained earnings. I should have told you, which I forgot, your dividends are going to be part of your retained earnings statement. So again, your income is revenue minus expenses equals your net income. Your retained earnings is your retained earnings plus any net income minus your dividends. Your balance sheet is that accounting equation. And finally, statement of cash flows. We have a whole chapter on this. You don't have to worry too much about it now. Just know that there's 3 sections to it. We have our operating section, our investing section, and our financing section. So let's look at how we're going to build these financial statements based on the numbers that are in our accounting equation. So let's do this again and bring some of these numbers down here. So first we're going to look at our income statement. Let's copy that. We know we need those numbers. I'll bring that down here. So that was our total numbers. When we're looking at our income statement, we're going to always label starting with our company name. We're going to tell everybody what they're looking at. This is the income statement. And then the income statement shows what is happening over a period of time. So we're going to say here for the month ended. And this is for January. We're going to start off by showing our revenue. So we label that out. What we had was some service revenue. And our amount of revenue is right here, that $5,500. Then we're going to list out our expenses. If you read through those transactions, we had a salary and wage expense. And that was $1,500. We had some rent expense, which was $1,000, and then we will list out our total expenses. We're going to put this in the far column here, which is $2,500. So then I can subtract my revenue minus my expenses to get my net income, which is $3,000. We're going to draw one line here showing that we're summing everything above it. We draw 2 lines underneath to show that we're done. After the income statement, we can move on to the statement of retained earnings. In our statement of retained earnings, we're going to show again our label or our heading. We bring down the Hawk Corporation. Let everybody know what they're looking at. This is the retained earnings statement. And finally, we're going to show them what period of time they're looking at. When you're doing your homework, make sure you look, is it a month ended or a year ended? All right. For the retained earnings statement, we always start with our beginning retained earnings. That's January 1. That's when this company started. We started with nothing. So we would then add in our net income, which I'm going to bring down from our income statement to give us a total of what's coming in. We are going to subtract out those dividends. Go scroll back up to my accounting equation so I can be reminded of how much those were. 300. Again, those are being subtracted, which will give me the retained earnings at the end of the month. which would be $2,700. The next statement then would be your balance sheet. Again, your balance sheet's going to show you a picture of what your accounting equation looks like at a moment in time. So that heading, we start with the company name, tell everybody what they're looking at. But since this represents one day, we're just putting that one day here because it's not over a period of time. We're going to list out all of our assets. And this is coming straight from this accounting our accounting equation. If I can remember some numbers. So we have cash, which was $10,400. We had accounts receivable, which was $1,400. We had some supplies, which were $400. Equipment, which was $700, to give us our total assets, which is $12,900. Again, the goal of the balance sheet or the accounting equation is to make sure our assets equal our liabilities plus stockholders' equity. So now let's go ahead and make sure we list out our liabilities and make sure it all works. So we have one liability, it's our account payable. Since we only have one and we don't need to sum anything up, we'll just go ahead and throw it over in that last column. And then we're going to list out our stockholders' equity. And there should only be a couple pieces left of your stockholders' equity. You have your common stock left, and you have retained earnings. Those are the two pieces that you're going to see on your balance sheet, and let me explain why. If I come back up to this accounting equation, my stockholders' equity piece, my revenue and expenses went to my income statement, my dividends went to my retained earnings statement, and then all that's left there is that green, the common stock. But I also have to remember that I need to bring down this retained earnings into my balance sheet. So my common stock was $10,000. My retained earnings that I'm bringing down from my retained earnings statement was $2,700, giving me that grand total of $12,700. I'm going to add those up. It's going to equal $12,900 for my total liabilities and stockholders' equity. And I can go ahead, show that that agrees, and then that statement is done as well. Now remember, there's one more statement, that statement of cash flows. Know that there's 3 sections to that, but again, we have a whole chapter dedicated to this. I know this is a lot all to start with. Take your time, do the practice, and if you've got questions on anything, please let me know.